Hi, I'm Jim Jubak, and welcome to my YouTube video Trend of the Week. And the Trend of the Week this week is what Target's plunge means for you. Target missed earnings on May 18th, and by 2 o'clock on the 18th, the stock was down 28% on the day. What Target said in its first quarter earnings report is, hey, you being Wall Street, we're expecting us to make $3.05 a share for the quarter, and instead we made $2.19. Whoops! What's important here is that Target's sales were really great. In fact, they beat estimates for same store sales growth. They got about 3.3%. Wall Street was expecting about 1%. Revenue as a whole was up 4%, and they turned in $25.2 billion in revenue versus expectations for $24.3 billion. The problem was operating margins, that the margins for the quarter were expected to be 9.5%, and instead they were 5.3%. And the result was this. Here's the chart. This is today. Blomp. Off the cliff. And part of the problem is that Target came out and said, hey, we don't think this is a short-term problem. You know, we told you guys that our long-term goal is operating margins of 8%, and we missed it this quarter. We did 5.3. But we're going to throw out that goal completely for all of 2022 because we don't think we can make it in this environment with inflation, costs rising, etc. The worry for people who don't own Target but own other things is that we're going to see this in company after company after company. We saw in Walmart, another retailer, it said basically the same thing. Hey, we saw sales growth, but margins were terrible. And so what we're seeing is sort of a sense of these retailers who are really good at what they do, at selling stuff, are still seeing compression. And if you then think about companies that aren't so good at generating sales, but are still seeing this rise in cost, cutting into operating margins, for those stocks, this might even be more of a danger. The other part of this that's really, I think, interesting in a kind of bad way, is that Target said, hey, we're expecting all of this for at least 2022. My worry is that we're not talking about just 2022. If this extends far enough and the Fed struggles to get inflation under control and it's still cranking down on rates in 2023, we're probably looking at a slowdown in growth, probably a recession at the same time as inflation is still high. We're talking about seeing the crunch that Target reported in operating margin, but also a slowdown in the top line revenue, exactly the opposite of the good growth that Target got. Two bad things instead of just one. So thanks for watching. If you liked it, give us a like. You can sign up for my YouTube channel. That'll give you a notification of when I do another one. I do about 3 a week, so you can subscribe. I've got a free site which has 3 portfolios. That's jubakpicks.com. And there's also a paid site which has 6 portfolios where I look at more volatility and ETFs and some options. And that's jubakam.com. Thanks for watching.